straight to our first management. We have Uflex that's in focus. The numbers, well, they were a little bit disappointing on a year-on-year basis as well as on a quarter-on-quarter basis. To understand what's the outlook from here on, we have Mr. Rajesh Bhatia, the Group President of Finance and Accounts and the CFO of the company, who joins in. Hi, Mr. Bhatia. It's been a while since we chatted and good to have you on the show. Well, let's run through a couple of basic details then. For the past year, what was the volume growth, if you could tell us? And for the coming year, given that you have some facilities that have come on stream, what's the guidance in terms of volume growth?
I think the volume growth for the year as a whole was about 2% only. But, the initial quarters were bit, low. So on a Q4, we have about a 7% volume growth, which is very healthy and which has also given us a much higher, about a 7% increase in the operational EBITDA to about 455 crores. So which is about 1,800 odd crores annualized number, which is going to be much better than the FY24 for the year as a whole. And, we've been again impacted by the currency losses in Nigeria and Egypt, which are very substantial this year. And other than that, I think, the flexible packaging, the aseptic packaging, the holographic, and other substrates like chemicals, every business is doing exceedingly well. It's only the films business that has seen a lower volumes as well as a lower margin. But, I think in the last few days, we've seen about a 10% increase in the prices in the BOPET films in India, I think, which augurs well for the industry. And so this is without any corresponding increase in the raw material or other costs. So I think in the quarters to come as well as, this should augur well.
Mr. Bhatia, good afternoon. Thanks a lot for joining in. This 10% price hike that you spoke of, is that at an industry level or is that at a company level? So if it is at an industry level, would you as a company look to increase prices as well?
So it's at an industry level, first of all. So everybody is looking to, has done its bit in terms of the price increase because the prices had become far more unsustainable. And I think even at the current level, people will may not make losses, but still, I think the prices are way below, what the normal levels should be. So
all right, All right, Mr. Bhatia, before we get to the margin outlook, give us the spreads since the prices have increased on BOPP, I think you said, or BOPET. First, tell us what is your mix currently in terms of revenues from BOP as well as BOPET, and what are the updated spreads at current reckoning?
So we have about 30% out of the films business, about 30% is the BOPP.
Okay. And what are the spreads, sir? We lost you on that.
So I can give you a blended margin only. I think currently we are at about 11% overall EBITDA margin for the packaging films business.
But what explains the decline in the margins overall, Mr. Bhatia? It was down to around 10% from 12% in FY23. Do you see that normalizing back to around 12 or 13% in FY25?
So if I see the last two quarters, including this quarter, the operating profits margins are about 13%. So they've been in the range of 12.5 to 13%. I think with this 10% increase and also, some of the investments that have come on stream in the will come in the current financial year. I think we'll look at least, over the current year, we should be easily looking at a 2,000 crore plus EBITDA levels in FY25. And that seems quite doable given the Q4 run rate and Q3 run rate as well. So I think we'll be very positive on the volumes. Aseptic packaging, we've done the highest ever production, and this year we were constrained for the capacity, so we couldn't have done much better. Against a capacity of 7 billion packs, we actually sold about 7.4 billion packs in FY24. And our exports are also resounding. We do export about 40% of the aseptic packaging from India to global markets.
All right, just to get that number correct, sir, on the aseptic business, it is 7.4 billion packs.
Yeah, is what we sold in FY24. We have
Okay.
a commissioned capacity of 7 billion packs at our
Okay.
Sanand plant, and we actually did a slightly above that.
Okay, and what does it mean in terms of revenues for the aseptic business?
The revenue would be close to about 1,300 odd crores.
1,300 crores. All right, and that's at optimal levels, right?
Yeah, that's the optimal level for the current capacity, but as we are
Okay.
debottlenecking, and that is currently on. So before the next season begins, the capacity will go up from 7 to 12 billion packs.
Okay, all right. And just to reconfirm, sir, just wanted to confirm that EBITDA, you're guiding for around 2,000 crores in the coming fiscal, and that compares with around 1,400 crores, right?
So that compares with around 1,500 odd crores in the current year, because I think we looking at the operational EBITDA and excluding the impact of all these currency deviations and all that. So that in the current year is about 1,577 crores in FY24. And surely we are looking at a 2,000 crore plus number in FY25.
So that's broadly a 25% increase in the absolute EBITDA number on your calculations.
Yeah.
And what about the debt number? The interest cost still remains reasonably high. So if you could give us what is an updated debt number? I recall you telling us that maybe at some point of time you'll start paring down the net. What's the net debt number?
So the debt is about 5,500 odd crores. And as on 31st of March, we've added about 1,200 crores in the fiscal FY24 as we commissioned our Panipat PET chips plant, as we commissioned some of our PCR and the CPP facilities in Russia. So the debt level is now 5,500 odd crores, the net debt level. And we have a scheduled repayment of about 1,000 crores in FY25. We also had a similar sort of a repayment in FY24 as well, which we paid. And we have a similar level of repayment coming in FY25 as well.
One final question, Mr. Bhatia. You spoke about Nigeria and Egypt. How much does that as a geography contribute to your overall top line? Because you've mentioned that you are extremely sensitive to the currency devaluation there. What are the steps that you are taking to offset that pressure that is coming in from these geographies?
I think they are more or less, the losses because we have to convert from their respective currencies to reporting currency, first to dollar and then to reporting currency in India. But if we look at their standalone, the local level currencies, I think we continue to be in an extremely good position in both the jurisdictions. Egypt, outside of India, Egypt is today our largest, sort of setup outside of India. So they have a substantial capacity, and we are expanding there as well in terms of setting up a PET chips resin facility. So both India and Egypt PET chips resin facility will actually help us to almost complete more than 80% backward integration in terms of our raw material requirements for the BOPET films, which will, I think, is a long-term good for the company, as I said earlier also, we lost in the last few years quite a bit of a margin on the raw material purchases when the markets were at their high. So I think that will provide more stability to the earnings. So the only thing that will be left to is the market prices of the packaging films. At least on a raw material side, you will have much more certainty as we go forward in FY25 and beyond.
Appreciate you joining in, Mr. Bhatia. Good chat after a while. You're sounding quite optimistic about the future. The past year wasn't that great, but you're saying on a like-to-like basis, the EBITDA number, the absolute number, will pop up by close to around 25%. And you're seeing signs of pricing improving on ground as well. For the time being, the stock is down close to around 4% because the past quarter's numbers were a little bit disappointing and the year on the whole was quite challenging. We're slipping a short break on